Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Jason, can I add one other point, Jason?
Yep, absolutely.
At the ISE, we just introduced the widget, and you can actually, if you go to the ISE, www.ise.com/FX, you'll see the widget right there, and you can actually download that to your desktop, and you'll be able to see the fixed pair prices. And not only that, if you click on that, it'll take you to a place called Live Vol, and it gives you charts and live prices. So even better than this is sort of my fault, Jace, an older slide that we had from months ago, but we just have some new functionality that we think is really neat. So again,
I've actually heard about.
Awesome.
I've just sort of reinforced that. I've heard of a few things that you guys have coming out, and we're real excited to get those incorporated into our sort of day-to-day outlook on the FX options as well. Some real neat stuff. So good. Everybody should kind of keep an eye on that for sure. I was just going to say, Steve, as well, somebody had a question with respect to accessing their ISEFX options, and I think maybe I answered that, but you can access these options through most major brokerage accounts. So whether it's E-Trade, whether it's Interactive Brokers, whether it's Options Express, most of these brokers, well, I know those three for sure, will allow you access to this market. So they trade again. You'll access these pair values as you would any conventional stock symbol to get the quote, and so real easy to access. And then of course you're going to just do your research with respect to the appropriate option contract that you want to utilize based on your market outlook. Now, as we move forward here, just again to remind everybody that we produce on a weekly basis an FX options outlook, which is a great way for you to gain some insight as to where we anticipate the different pair values going. And we always start off with a look at our at the U.S. dollar index, which sort of gives you a little bit of a broader perspective, and then we narrow it down into the different pair values. And we try to identify for our viewers some real key levels that one needs to be considering when it comes to making any sort of a trade decision. And at the end of the day, as we sort of move forward through the presentation, we're really again making our observations based on the technicals, based on what the price charts are telling us, and we're simply using some basic techniques to determine probability of direction. And it's important for you guys to understand that that's essentially what this business is all about. It's about establishing a measure of probability and then putting an appropriate amount of capital towards that, but always understanding that there is the risk of loss. And so although you may feel like you have you're entering into an opportunity with a high probability of success, our main focus, our main goal, regardless of what market we're trading, is, of course, protection of our capital, because if we run out of capital, we're out of business. So when it comes down to looking at these FX options pair values, we're simply just taking our some very basic techniques, applying them to these price charts, going back and doing our due diligence, and just creating an overview based on probabilities. And what we're doing is we're just looking for clues that will help us with particular trade entries, as well as locking in specific profits and cutting losses. So I always like to suggest that we're like a CSI, we're like a crime scene investigator. And when you look at a price chart, think of it as looking at a crime scene, in the sense that you're not going to go in and on one clue convict any certain way. What you're going to do is you're going to build a case that is airtight, and then you know that you have a high probability of winning that case. And so that's what we want to try to establish here tonight, is how to create that step-by-step process to put all the pieces of the puzzle together to, at the end of it all, come up with a high probable trade, but at the same time recognize that anything can happen, and we always want to be erring on that side of managing our losses before and locking in our profits before anything else. One thing that we always try to reinforce as well is that you have to keep an open mind. If there's one thing for sure is that the markets, regardless again of what market you're looking at, has been and will continue to be known as the great humiliator. And just when you think you've got it all figured out, the markets take a detour, and you realize just how humble you are. And again, that's why the protection of your capital is the most important. But although we can have a directional bias, the one thing that you'll see on a weekly basis is that we're always open to the possibility of being wrong. And at the end of it all, we do that by identifying key levels and suggesting that, okay, if prices break below this, then our thesis, because we call it a thesis, the thesis that we're building here, the case that we're building, is coming under some pressure, and we have to be prepared to act on that. Now, again, we need to understand that we're dealing with probabilities. So if we move into using the whole concept or the whole approach of technical analysis, recognize that technical analysis is essentially the study of market action. It's looking at a price chart of just where the market has been opening and closing over a specific period of time and the different patterns and trends that have been established, and trying to determine certain key characteristics that repeat themselves over and over again that precede other moves, so that we know if it's happened 10 times and 9 out of the 10 times X has happened, that if we place a trade based on that, we have a high probability of being right on that trade. We're really again looking at the open, the close, the high and low of, in this case, I have stock price, but of course of our pair value price charted as it's plotted on a chart. And we can view various time frames. Now, today we're going to look at and focus on our daily price charts. However, if you want to really narrow it down and look for some key entry points, then you could go down to an hourly chart. But again, recognize that the technical approach that we discuss, that we're going to be discussing here, will apply to those different time frames. It doesn't matter what time frame you're looking at. Support is support for that particular time frame. Resistance is resistance, and your key patterns that you see developing again for that particular time frame generally reflect the same on an hourly chart as they do on a daily chart. Now, of course, again, we're looking at these individual bars forming trends and patterns, and these trends and patterns help us determine market direction. So when we talk about identifying trends, we really try to keep it as simple as possible. An uptrend is going to make higher highs. A downtrend is going to make lower lows. And of course, you can have a sideways trend, which is essentially establishing horizontal peaks and troughs. Now, what we want to do is we want to watch how the price action breaks what we call our pivot point, and I can illustrate that here in a little bit of a diagram here. If we talk about the concept of an uptrend making higher highs and higher lows, basically what we're looking at here in this generic price chart is the idea of establishing a pivot point, or in this case it would be a peak. And if we understand that an uptrend needs to make higher highs, then by looking at that previous high, we can establish that if we break that high, we're in the continuation of an uptrend, and so on and so forth. So as we start to break those higher highs, we can stay with that trend, confident that we are continuing. It's when we start to see that pattern break down where we have to be prepared to, number one, lock in profits, or be prepared to step back and rethink our market approach. So, of course, as we continue to break these higher highs, again, the confidence is there that we're moving forward now, and so on and so forth. Sorry, bear with me, guys. Now, as you can see here, as we break that last high, we continue to the upside.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.